Good morning, everyone. It is Wednesday, January 19th, and this is Morning Market Movers, where we take a look at potential hotspots in the markets for today, and we do some live analysis for day trading. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have a few things to talk about today. We are going to be talking about, well, one, inflation in the UK and inflation in Canada. Both of those numbers, the CPI numbers came out, and we're seeing some action in both the pound as well as the Canadian dollar. Canadian dollar also moving around because of movement in oil. We're going to have to talk about oil as well. I mean, it's still above $85 a barrel. And if you're wondering, yes, that's a high price for oil. So we are certainly going to be talking about that. We also have got a new set of earnings reports. We are in earnings season, and while we had the banks at the end of last week all reporting negatively, we're now having banks report positively, seeing some action in Morgan Stanley beating earnings, Bank of America as well, pulling the banking stocks higher. And then Dow Components starting to release their earnings, and we're seeing some strength coming out of Procter and Gamble. Demand still high. United Health, go figure, healthcare companies.
Yeah, they'll do that for a while.
Yeah, and they're both, they're a couple of components of the Dow. So we're going to want to take a peek over there. So we do have quite a bit to talk about today. We'll start off though with uh, with foreign exchange, with the pound and the Canadian dollar. We'll move to oil, and then we're certainly going to be talking about equities with this new suite of earnings numbers coming out and coming off the heels of the sell-off yesterday. All right, before we really get into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just quickly, you can see, I mean, the Canadian uh, inflation numbers just came out, coming in higher. I think it's running at 4%. I'll drop that link in. Everyone can take a peek. And we clearly had some action in the Canadian dollar. We even tested the lows from last week, uh, bounced right off of them. But that's Canadian dollar strength, and they're going to have to raise their interest rates with their inflation and with the strength of oil. So I am going to flip it over to Brian. Brian, let's go through the FX, the oil, and then equities. We'll take a peek at where we are before
Sure.
the open.
Yeah, so a lot of things we talked about yesterday. We mentioned that again, using kind of economic news calendars as ways to find opportunity. We talked about this. Yesterday was, or actually this morning is a very, very big day with CPI numbers. That CPI is really the driving force for everything. We talked about the pound number going higher, and in fact, it came in 0.2 percentage points even higher. And because we're seeing pretty decent movement across that across the board. There was the pullback, and then obviously there was the bit of movement in there. Right now, you can see, I mean, obviously the euro pound was the big one we're looking at, talking about a gauge. That was down 44 pips in 24 hours, but you can see in the last 60 minutes it's all retracing. But we do have Governor Bailey getting ready to speak in a little bit. I'll show you guys the pound yen chart in a second, because that was one that actually bounced right off our level yesterday, came back up, and it just hit the 50% retracement and is kind of pushing back down again. We also saw it in Canada. Now, overall, kind of just looking big picture, you're going to look at this and say, oh, it's -1. That's great. CPI is going lower. Right? It came in exactly as expected. But it was the other things that people don't really look at and don't understand. And this is where I think it's important. So thus far, oil has been kind of the big hotspot as far as where inflation is kind of really the root cause of all the inflation really started with oil. But there's something down here called trim CPI. This was the biggest miss. It was supposed to be 3.4. And it's kind of, this is like diving into the numbers a little bit farther. What trim means is that it's excluding the most volatile 40% of items. So the ones that are constantly moving back and forth, they get rid of those out to try to give us like a little bit more balance. You can see, I mean, obviously, there's certain things that are higher, certain things are lower. We saw that energies weren't as bad, but now taking the volatile, and again, this is something that is pretty common where they take the most volatile items out. When you do that, you can see that it is absolutely surging. So the normal things that you don't normally see, being volatile instruments, they're starting to get out of control. And again, it's the volatile instruments that are keeping things in. Once those volatile instruments all of a sudden do their kind of swing back on the other side of the bell curve, just imagine what this overall CPI number is going to look like. Because remember, the trim ones and the median ones, these don't really move that much. They're very, very slow moving. When they catch up in this side, if this one swings back again, it could be astronomical. So Canada obviously seen some strength, and again, as Todd mentioned, there's some strength coming in from oil on that one.
And just quickly, and I
Yeah,
just do want to share. This is why sometimes I also look at daily FX because they report the numbers a little differently than you do on Forex Factory, where you actually get the actual number. And I'll make this a little bit bigger. Oh, that's not what I wanted to make bigger. I want to make this bigger.
there
There
you
it
go. I was like,
goes.
wait, it's not moving. Todd. There you go.
So we all can see, but as you can see, the actual inflation rate in Canada came in at 4%, and it was forecast. I mean, you can see how it's jumped. Previously, it was 3.6%. So while you can look at the change numbers when you actually see it going up, and now it's nowhere near what's going on. Well, now that website seems to be doing something goofy. You can clearly sometimes it does help to take a look at others. So, all right. Anyhow, let's move away from that. We could take a look
Mhm.
at what's going on in the UK as well. Sorry about that.
Yeah, I think let's look at the UK chart, or let's look at the pound yen chart first. This is the one we had up yesterday, and yesterday morning we were sitting right here. Okay, so again, we didn't know the price was going to come down. We had targeted and we'd actually drawn our fibs saying, hey, listen, if we can get price to move down, basically have this be our lows right around 10 o'clock. This 155.45 time frame. We were looking for a potential pullback to that area, and again, we ended up coming down. We hit the 155.45, and funny enough, when did it hit that level? Right at the UK Open, which is right here, where we thought that news was coming in, which we said, hey, listen, watch this 2 a.m., look for this number. 2 a.m. is right here, right? And then what happened? The UK market opened right here, and boom, off to the races. This was a very, very fast runner. Really, in a matter of 3 hours, we're talking about 70 pips to the top side. So massive amounts of movement, very, very fast. Again, CPI, inflation is a very, very big driver. Now it's interesting because we have come up, and again, because we would have gotten a long position here, our target should have been right around the 50% mark, which we knew was right around the 156.09. And again, that's the 156.09 is where we had the alert when we came back up to that zone. Really, I mean, the 50% was 156.19. We literally came back up to it. Again, we saw very strong push in, big basing, very strong push down again. And now it's kind of turned. Now we do have lower highs in here. And it's interesting how this is set up. So we know what the inflation data is. The question is Bailey coming in here in the next 20 minutes?
And
Is
shock it
Bailey
is,
come in
right?
and flip us around? So he's going to testify again. Anytime you hear testify, it's always good. Financial stability report. Remember, we know that inflation is high. He's going to have to justify it. To justify the fact that it's gotten this far, even though they've already raised interest rates once. Again, if he's going to kind of downplay and be like, well, Omicron, there's fears of this, there's fears of that. This could still happen. We have supply chain problems, drone attacks. Again, if he tries to kind of sabotage, the pound a little bit, because again, inflation is so high, saying that, hey, we didn't do a double raise because of all these things. These are major concerns. That could also lead us to kind of push back down again as the yen starts to get some more strength as well. So very, very interesting position. Like I said, normally if this had just kind of petered around here and then came up, absolutely before news, we were looking to short it. The reality is price drove lower right before the news this morning, and then we took off higher, and we're sitting high now. So again, is there going to be as much volatility around his speech as there was this morning CPI? No. So could there be an opportunity to take this from the 50%? Absolutely. And this is where you come back, and it's the big question of, do we focus on fundamental analysis or do we focus on technical analysis? This is what happens. We've
Right.
literally, if there was no news and this had pulled back again, you would absolutely be in a position right now where we'd be looking to take your shorts. And again, you still may want to get into it. Everybody has to make up their own call. We don't give recommendations or trade alerts or anything on this chat, in this broadcast. But again, it is on a technical basis where we talked about yesterday, and we do have news coming in, and his news is coming in right there. So kind of interesting how it's all set up that way. But that's what we saw with the pound. The Swiss yesterday, if you attended the broadcast, we talked about, I'm not sorry, not the Swiss, the CAD. We talked about the CAD coming back down, breaking 125. And yesterday we were sitting right around here, right? Price drove up, and we had this level drawn off as a previous, violated level. And I said, we could shrink this. We could literally take this and say, well, here's the basing level right here. And that's exactly what it came up to. Now I have this little cog wheel up here that you can see. At about 3 o'clock yesterday, we came up and hit the cog. Interestingly enough, I say interesting, but not, it doesn't surprise me. if you look at oil yesterday also had an
Hey,
amazing rally, and we talked about it. And again, I drew this. I didn't. This wasn't like where it was supposed to hit. I didn't know at 2 o'clock it was going to take off. But what I did mention was this is what the European session basically did. And when we see down European session, we tend to see up US session. Okay, I moved it over here. So again, this wasn't one of those things like, how did you know that? I didn't know it, but I will say what we've seen most times is when we have a down market here, we tend to see an up market. And again, if I had drawn this correctly yesterday, till what 4:30, this would have been how I would have drawn it yesterday, saying that we were starting there. It would have been here to here. Now, did it keep going? Absolutely, but not coincidence that it just happens to match the CAD.
right.
That's where it switched. Now, yesterday I said absolutely 125. I think we hit it. You can see that we came down. We ended up basing off of it a bunch of times. We've broken it. And now we've actually driven lower. And right around here, this 124.60 level, I don't know how to say this and not offend anybody. I'm going to offend people because it's 2022. Welcome to a support and resistance trap. This is exactly what this is. There's no other way to say it. People see this and like, yes, it's a bottom. It is. Yeah, it is a bottom. And everybody knows what support and resistance. I mean, again, it's a level of 124.53-ish level. Again, 124.50 is a psychological level, so people see that. They say, oh, look at that. It's a pivot low. I love it. Looks great. But again, it was kind of this pullback right beforehand typically shows that, hey, listen, we're going to break. Whenever you see price pull back right before a level, it knows that there's buyers there. It's pulling back. And that's exactly what it did. It drove down, broke it, triggered everybody's support and resistance triggers. And then what did it do? Where did you guys, when you shorted here, where did you put your stop loss? You stuck your stop loss right there, right above.
And they got stopped out.
And what happened? Boom, it took everybody out. So again, kind of one of those predictable trade setups there. Again, I do think the price has the ability to come back down again. There was news this morning. I'm dropping my sons off at school. They had I forget what firm he was with, but it was basically a guy discussing oil and what demand has looked like, particularly because yesterday we had drone attacks in Abu Dhabi. Again, it's not plastered everywhere, but there's these drone attacks in Abu Dhabi, right? Some of the interesting things they talk about is like, listen, they've been doing really, really well. This kind of throws a wrench into a lot of those peace talks now that there's drones and people are dying over there. And what he mentioned was, thus far, oil has done very, very well, avoiding all the major problems, right? We knew there was going to be supply chain issues, and there was Omicron.
Yeah.
Gun had that Black Friday event back in the fall. Thus far, oil really hasn't been super phased by it. It's been able to, supply although it's, I would say, a high risk delivery right now, we're still getting the oil that we need. OPEC is controlling things, but he shed some interesting light. He says, Russia keeps holding back them producing more, but Russia right now, even under the lower requirements, they're having a difficult time meeting their contracts right now. Russia actually can't produce anymore, hence why they're holding it back again. So they're trying to milk it for everything it's worth. They said UAE, which where the drone attacks were, and Saudi Arabia are the only two countries that can actually increase supply.
And the UAE is under attack.
And because oil is now a dirty word, there's been absolutely zero investment in the last year into increasing supply. As everybody's coming out from under Omicron, they had price projections of $96 by the end of this year. And by first quarter this time next year, $105 barrel oil. We're in that kind of, 86 range right now. So again, the more that emphasis that is being put towards oil, as well as, again, we've seen inflation rise with, right here across the board for the CAD. I think we should be looking, keep your ears down, look for any type of information about rising interest rates. I think this pullback is here. It's an easy trap. I think 124 by the end of the week is definitely possible, especially if something else happens in the Middle East with UAE or they talk about oil disruption. Remember, the inventory report is not today. The inventory report is, it's not today. It's tomorrow. Okay. So again, start looking for your API reports. Again, keep your eyes peeled for anything else in Abu Dhabi. Tomorrow morning, I think is going to be a great play. And again, I think that's where the dollar CAD can finally come down here and break. This is also going. What?
I was going to say, let's finish up with the equities.
You want to talk about the dollar? Yeah. So basically, here was the pullback. We talked yesterday about how we got to find where the stopping point was. We knew we had sellers. See this base right here? It shows you we're going to break. Then all of a sudden we got this and we based lower. It's like, oh, here we go. Harry Potter to the downside. There's your level. There's your Harry Potter inside of the Dixie. Down, base, pullback, and collapse. So dollar is also pulling back from its big run up yesterday, which is affecting everything else. Now, when we talk about other things that we're not really trading, Dixie and VIX. Dixie, Also, yesterday had some craziness. We saw that it was
Yeah.
up 13% yesterday. And what did we say? 13% is way out of the norm. Everything is going up. Look for a reversal. Well, guess what? It even gapped higher after the market closed. And what has it done? Nothing but go straight down. It's down 2.94%, which means all the equities are green. Okay, standard piece there. So we ended up coming through. We grabbed some different levels here. We were trying to find the bottom in some of these places and figure out what kind of made sense. It took till midnight. I mean, really, it kind of pushed down before all the volatility disappeared. I would say right now in the ES, let's drop this down to a 15-minute. Really, the best level that we have above is kind of sitting right at that 4609. It's a decent base. It doesn't match up with fib targets. It's one of those things that, we kind of had it drawn. We were kind of looking for a predictor on it. It went a little bit higher, but I would say right now with it pulling up a little bit, again, it's looking good for kind of a reversal from yesterday. Not as much concern, even where it is. I mean, in the next 30 minutes, if it does pull back lower and comes back in this 45.75, then we can look for long. But right now, it's kind of holding, and it's flirting with the sellers right here. So the question is, in the next 15 minutes, do we pull down and grab buyers lower here, or do we make that push up and really start driving up to the 4609? So ES is in a very interesting spot. NQ, obviously NQ got beat up pretty bad yesterday, and all you can see it doing now is rallying. Nice little double bottom here, and it's interesting. The double bottom, you guys know the rules on double bottoms, right? You're entering on the neckline. Guess what? The neckline just happened to be at 15,100. And what did it do? It went 15,200 and pulled back right where there were sellers here, and also the psychological level. And then what did it do? It drove higher, needed some help. And where is it right now? 15,300. So you guys can see how it's using these zones as kind of areas of, again, buyers and selling, but also some basing. So right now, if we maintain the positivity that we're seeing thus far in the market, I would say, there's some sellers sitting right here and right here. I would say, on a positive sense today, look for 15,400. It's only 100 points higher. It's already rallied up 97. We know that this one can move on a daily basis.
What's the ATR?
263. It's
we got plenty of room.
150 to go right now. And again, does it have to go straight up? Oh, it's pausing. There we go. That's only 100 away. If we go up 115, look at this. If we go up 115, right there, 130, we just happen to be where we had that last area. And again, I could probably shrink this down a little bit into kind of there on a 15-minute basis. If you take that measure right now from exactly where price is right now, it's 121 pips. That would be its one daily ATR up, and then again, a potential rollover for anything we hear later on today. So that's kind of set up. YM's also in a very interesting spot. There you go. We drew this one almost to the. We talked about 35,000. I said it's going to hit 35,000. Look, and that's where we drew the fibs yesterday. I missed it by 15 points. So out of 35,000, it came to 35,015. So I missed it by 15. There was your reverse.
Yeah. What the heck?
I know. I'm getting weak in my old age. I missed it by 15 points. It did give us the bounce back again, and what did it do? It came back up, grabbed that prior level. It is rallying higher. I would say right now, look for this one to come up. Most likely, and again, we mentioned that the 50% is a little bit off. I would say 35,500 to really 35,540. Right in there is where that basing and that last kind of initial surge came in at. I look for this one to pop up. Looking at YM, everything we've seen, I would say, listen, this one is kind of set up. We know that the fib trader is going to jump in. Right now, we're a little bit away from that. We're sitting at 150 points away. This is kind of setting up almost for like a 10:30 reversal today. We see these things, they rally, people get in. It's like, yeah, it's a green day, and then 10:30 they reverse,
and then the profit taken.
Yeah, this is kind of going in that same sense. And Russell kind of the same thing too. This was that old level. We talked about the Harry Potter. We didn't get the cleanest entry into it, unfortunately, but it did. It drove all the way down 2070, and now we're rallying back up again into that same level. Question is this where we form the base? But we know right above this 2120, 2124, it's an old level. And again, on this side, it provided buying. And then on this side, it provided selling. But we do have a confirmation that there were sellers here. If they weren't, price would have went higher. That's kind of setting up also for somewhat of and again, 2120 is a level we've used for a while. Also kind of setting up for a 10:30 reversal today. And again, news-wise, we know we really don't have much in there. But again, 10:30, most common reversal time. Every one of the equities is kind of in the same spot, looking for somewhat of a green open because, again, the VIX is down. But what happens at 10:30 when everybody starts to take that profit? Is the market strong enough? Because all we hear about is how the economy is starting to deteriorate. So, again, I think some interesting trading opportunity. But you got to wait another 15, 20 minutes to see how that opening candle looks. And, again, look for if we do get that initial surge, look for reversals today because there's not enough news to really, bumpy trajectory, I think, for the most part.
All right. All right, that was a lot. We had a lot to cover this morning. With that, any questions for Nadex, please email us customerservice@nadex.com. Brian is also accessible. Please feel free to email Brian, support@keeptradingsimple.com. If there's things you'd like to see us do more of, I am also accessible. I drop my email in there, todd.rich@ig.com. What do we have going on today that we covered and we went through quite a bit? We started off with the Canadian dollar and the pound, both inflation running hot in the UK as well as Canada. We're seeing some movement there. We took a peek at the pound yen and the US dollar CAD. CAD also moving on oil. Oil still above $85 a barrel, and interesting things going on. And we're going to see how the price of oil plays out with all the geopolitical events that are going on right now, and as demand continues to ramp up. And lastly, all these earnings. Markets all looking to open in the green after yesterday's sell-off, and we're going to continue with earnings season. And the earnings, for the most part, I mean, while we have a mixed bag here and there was some struggling. We saw some of those banking stocks, Morgan Stanley, Bank of America, beating earnings, unlike last week where we saw J.P. Morgan and Citigroup sort of miss. And then we're seeing Dow components, Procter and Gamble, United Health. So probably going to look. I mean, we certainly are having a green open with all the earnings. We'll see where that goes today. Brian and I will be back again tomorrow morning. Thank you so much for joining us, everyone, and we will catch you again tomorrow.